Hi. Well, I know I said that was the final update for the day, but I have to betray that. Things escalated quickly. You can see the market opened right around there. I guess you actually can't see the cursor, but you can see the mark on the bottom, which is the time. That's Sunday's open. Market fell, rallied slightly, and it's been carnage since then. We're currently down 420 points. 16,049 for the future. I had sold a little bit, I bought it back. I've got to believe there's some kind of bounce. Even if it doesn't, I'm where I started the day. And as you can see, if you're watching, up there is the change in the Dow. This is live. This is at 10:16 my time on Sunday night. Market Dow down 436 on top of the 1,000 point move last week. It's certainly, and here we go again. We're down 450. We're about to take out the low of 16,002. We just took it out. We're down 480, 490, 500 points. Down 500 points Sunday night. I did buy a small piece back, and I'm glad I did because some kind of bounce is coming. And the problem is that this market is way too high. The real value is not there. I spoke to a real estate broker in California who told me that an apartment building was trading at 28 times. Now, 28 times income sounds ridiculously high. He was talking about 28 times revenue. There's an example. Price is too high. Whose fault is it? It's Greenspan's fault. It's Bernanke's fault, and it's Yellen's fault. They have created too much money. If the amount of money in the system doubles, prices will double. And if you're measuring the output of the system, you might think, wow, the system's doing great. They did twice as much business. But if it's just prices doubling and the amount of business stays the same, nothing's improved. Nothing's improved for the man on the street, and they know it. The man on the street knows that the elites have been getting away with it for years. And that's why Donald Trump and Bernie Sanders, when you really can't think of a more disparate pair, one arch capitalist, the other self-proclaimed socialist, both leading their respective parties. Well, I can't say Bernie Sanders is leading the Democrats, but certainly he seems to be leading the buzz in the Democratic Party. It's not going to end well. And everybody expected that the end would not happen. Wouldn't happen soon, may not happen ever. As Dick Cheney famously said, deficits don't matter. Well, they don't matter until they do matter. And here you've got the Dow, it's rallied quite a bit actually. We're up 70 odd points from the low. Only down 400 odd right now. I'm actually going to buy another small piece back. Although I have my doubts, I'm going to change the time frame and get a better look. I don't know if this is interesting to you guys or not, but I have to think that this is an interesting buy. If I can buy 22s, I snoozed and I losed. Let's see. If it goes much higher, then I don't really want it if it gets back to me. But we're close. As you can see, well, you can't see, but my purchase price is 0.22. You can see it there, right there. As a matter of fact, I'm trading 0.30 right now. 8 points can happen in a flash. If I get filled, of course, I will wish I had not been. And if I don't get filled, I will wish that I had been. So that is the life of the trader. But back to the theme. This is long overdue. The market is trading at minuscule yields, astronomical PEs. It's become commonly accepted practice for companies to issue non-GAAP earning releases. GAAP is generally accepted accounting principles. How on earth can it be possible for a company to issue their results and not be conforming to generally accepted accounting principles? But you'll see now that when you see earnings in the paper, it'll say non-GAAP. Or another word for non-GAAP, excluding special items. There's no special item. If it cost you money during the year, it's an expense. You don't get to say we would have made $1 million if we hadn't had to spend $1.5 million closing this factory. You did have to close the factory. The numbers are going to be revealed to be wildly inflated, and I just got done. I bought 22s, didn't even see a trade there, but I bought them. I'm short a lot less now, and I'm hoping for a rally. If we get one, I hope to sell it about 150 points higher when we get back to this moving average line. This line represents the last 14 bars of price, the average. So it doesn't actually indicate anything, it's just the average. So you might look at it and think that the price moves to it, but it's derived from the price, so it's not really a valid inference. Anyway, here we go. I mean, we're almost under 16, and most people have yet to hear that the day has begun. So good luck this week. Take care.